Good afternoon, folks. Thanks so much for tuning in this afternoon. We are very excited to introduce you to Barometer's newest investment idea. It's something that we have been working on for quite some time. In fact, in development for about 4 years. And today I'm looking forward to introducing you to our partners in the Barometer Music Fund. We have Gavin Brown and Michael McCarty, who are with Kilometer Music. They're the partners in our fund. They are industry veterans, and I'll let you hear from them. But I just wanted to set the stage a little bit. As I think most of you know, Barometer is all about finding big structural themes where something changes in an industry that we believe changes the value of the businesses or the investments, and that realization will take place over a period of years. To put a point on it, when the growth stock bull market ended in the year 2000 and technology rolled over, Greg was very astute in recognizing that the income trust structure was one that might be right for the times. We thought markets would be tougher and investors would look for more certainty, and a vehicle that paid a steady stream of income that might rise over time would be attractive. And because the structure gave discipline to the management teams, the only deals they would ever do would be deals that would increase what they were able to pay out to their investors. And of course, we had a wonderful run in the income trust space, starting the Barometer Income Fund. In 2009, we were fortunate to recognize that fracking was changing the oil and gas industry. And the world went from drilling a hole with a 30 or 40% chance of success to drilling a hole with a 99% chance of success. And we recognized that there would be huge production growth in the US, and that the pipes that carried the oil would go from being boring, low growth, high dividend paying investments to much higher growth investments. And they gave us kind of 25% returns per year over the next 5 years. A little bit later on, the software industry went into a major rebuild, and you went from selling software once as a product and then hoping that the buyers would at some point re-up 2 or 3 years down the road to buy a new version. And it switched over a subscription-based model. And so that the purchasers of software would pay every month and get all of the updates. And of course, that makes the business that much more valuable, and the multiples that investors were prepared to pay for software companies went up by many times over the next number of years. So this has always been sort of our modus operandi, try and find these industries that have gone through restructurings. And the music industry is an interesting one because, of course, we've all grew up buying records or buying CDs. And you bought it and you used it until it was old and broken and then fell by the wayside, and you bought newer music. But of course, the music industry has gone through this massive shift to the web and to digitization and to a subscription-based model. And we all are slowly signing up to subscription services and paying for music every month. And it's all there at our fingertips. So this is an industry that became sort of hated. And as streaming really picked up, people started to recognize that this might be kind of interesting. And so Greg came to me about 5 years ago and said, I'd like to look at building an investment product in this area. And ultimately, we did our first fund, which was a small one. It was a tester. And that was 2.5, 3 years ago. The goal was to buy music copyrights where you own the intellectual property and you own it forever. The life of the artist plus 70 years. And every time the music is played, you get paid. And so it was an income-oriented investment that ultimately could be revalued over a period of time. And the fund paid us close to 10% a year. And in 2.5 years, the value was up by about 45% and gave us a great investment. So we're doing a larger fund. It's one that we're quite excited about. We found, we believe, the partners to partner with. And today on the call, I have Gavin Brown, and we will have Michael McCarty, who are going to be here to talk about their backgrounds and why investors might want to look at music royalties. And so with that, I want to turn the meeting over to Gavin Brown.
Thanks, David. Thank you, everybody, for joining us today. My relationship with copyright started in the late 80s when I started writing songs and being a songwriter and a drummer in a number of bands. Since then, I've seen the evolution, like David has said, of the different forms of dissemination of music, but the value of the copyright inherent in the song has stayed attached to the song. And in the last few years, we've seen a revolution in the cash flows in this area. Over the years, I've been a drummer, I've been a songwriter, a record producer, and in all of those cases, like I said, I've had a relationship with copyright. Not only have I, been involved in the music business, I'm an amateur golfer. And as I was playing golf with our friend Greg Guichon last summer, he was telling me about Fund One and Fund, how interested he was in starting a second fund and how Barometer was already in the process of doing so. He went on. He waxed poetically about a gentleman named Michael McCarty, who everyone told him was the royalty guru in the space. And so Michael's just joined us here. He'll give us a presentation in a bit. But Greg was saying how Michael is the guru of royalties. And I said, well, it's funny. I've known Michael for 20 years. Michael signed me as a writer when he was the president of EMI Publishing. So the confluence of events led to us forming Kilometer Music Group, and Michael leaving his position at SOCAN and bringing Rodney Murphy along. We partnered with Barometer Capital, and here we have the Barometer Global Music Royalty Fund. I've been lucky enough to work with bands from the Tragically Hip, the Bare Naked Ladies, Billy Talent, 3 Days Grace, Lady Gaga, New Kids on the Block, Hoobastank. I've done movie music for Twilight. I've done movie music for a number of other notable movies. And in the process, like I said, saw my earnings increase over the last few years. Michael spent 17 years as the president of EMI Publishing, which is at the time the world's largest publishing company. He was the president of the Canadian arm. Previous to that, he worked in Los Angeles for Michael Jackson and spent the 90s signing artists like Wilson Phillips, who was the Beach Boys and the Mamas and the Papas kids. He then worked with Sum 41, Nelly Furtado, and signed myself, a girl named Simon Wilcox, who's gone on to be a very notable songwriter, writing with Nick Jonas and Britney Spears. Then he went, after EMI, he went to work at Olay, which is now called Anthem, which is the Ontario Teachers Pension Plan, their foray into the music royalty space. He was the president there. He helped increase their value considerably, most notably bringing an artist named Timbaland into their catalog acquisition and futures buckets. Timbaland worked with Justin Timberlake and Ludacris and Missy Elliott. Then Michael, for the last 7 years, up until his departure in December, was the chief membership officer at SOCAN. SOCAN is a collection agency for composers and authors, basically songwriters, for their performing rights, which is one of the rights inherent in the songs. It's Canada's largest music institution with over 400 million in annual distributions to the songwriters. He was instrumental in increasing the foreign earnings, doubling them over the course of his tenure there. And also one of Michael's very strong strengths is finding the finders. He's able to snuff out who in the ecosystem is really special and how they can add value. In that, he found a guy named Rodney Murphy, who has been at SOCAN for 17 years until leaving in December with Michael. And he's the guy who's the secret weapon of Kilometer Music Group. He knows everyone who's a creator in Canada. He knows everyone from Drake all the way down. He's had a unique bird's eye view of the earnings that each of these creators has had. He's been able to do royalty analysis for years and managed a $50 million annual advance portfolio. So he would keep all of us in heels, as it were, over the years. So he came with Michael from SOCAN. as one of our extremely exciting economic modes. We have basically a proprietary relationship with the top creators in the world through Rodney. We spent our entire careers creating value, adding value to song copyright and catalogs. We believe that right now is a confluence of events where there's an entirely new prospect of the growth of the streaming doubling by 2030, having a whole bunch of artists for a variety of reasons, estate planning, COVID, bridge financing, watching the value of their copyrights increase dramatically. We have a pool of creators very interested in selling, and they're highly motivated managers and lawyers as well. And we also have, the equity space, the investment community has extremely interested parties who are flooding the market with a bunch of capital. So we think we're uniquely positioned in this time to not only buy the right stuff from the right people, but also at the right price under our overarching mission, which Michael will now explain to you. A little bit about what royalties are, but mostly about why we're the best choice in the space. Michael McCarty.
Thanks, Gavin. Can everybody hear me? So as you'll see from the slide, this is called the Barometer Global Music Royalty Fund LP, meaning it's a limited partnership. And Kilometer is the music manager, meaning we're part of the management structure, and we make the investment decisions and manage the assets after we acquire them. And so let's start from the beginning. Let me go right to what I believe is a better way to visualize what music royalties are and how they fit into the value chain. So as you can see here, this is a diagram and it's a flow chart, and everything starts in this circle here with the artist. And we're using the term artist as an umbrella term that encompasses both the recording artist / performer that you'd be familiar with, as well as behind the scenes people that are also participants in the creation of records and songs. And that would be co-writers, producers, record producers, and beat makers, which is a subset of record producer. Many of the songs you hear, if not most of the songs you hear these days that are new, are the subject of multiple songwriters and multiple producers, and the beat makers usually start the foundation of it by creating a beat on their laptop with a drum beat and a synthesizer blip, and that becomes the foundation on which the song is written and recorded. All these people, all these participants have rights in those recordings and songs, and therefore they earn royalties. So they assign those rights to intermediaries, and that would be record companies, music publishing companies. Like I used to work for EMI, I used to run at Olay, and collection societies, which is a generic term for organizations like SOCAN, where I think Gavin explained that's where I was before this. And there's a SOCAN in every country in the world. And those intermediaries, their job is to aggregate the rights from all those music creators and offer those rights up as licenses to the industries and companies that utilize music in their offering to the public. So that would be, say, media companies such as broadcasters, radio, AM and FM radio, television, cable TV, pay audio, Sirius XM, and of course, these days, most excitingly is music streaming. So Spotify, Apple Music, Amazon, that kind of thing. And those companies receive those licenses, and then that gives them the right to use the music and offer the music to their customers. And of course, consumers then do what consumers do, which is they are listening to radio, ad-supported radio. They're watching ad-supported television. They're subscribing to cable TV that uses music. They're subscribing to Spotify and Apple Music. They're watching YouTube. They're doing all the things consuming of music that throws off revenue. They pay those fees, or the ad companies pay those fees back to the media companies, who then pay those fees in the form of license fees back to the intermediaries. And the job of the intermediary is to match those license fees with ownership of rights of music, and then pay those as royalties back to the owners and creators of the music. And so if this was an animated diagram, you'd see this constant motion going back from rights coming from the artist into the value chain, money come from the consumer back into the value chain, and coming back into the pockets of the artist as royalties. And so the picture we're trying to paint here is that all over the world, there's a constant consumption of music by consumers, creating this continuous flow of music royalties. And then, as Gavin referred to earlier, this has now really emerged as a bona fide, credible asset class, which is why you're interested in. And this has been a long time coming, and there's a number of reasons why it's really broken through, but it really comes down to the characteristics of the asset, which are recurring stable income. These are catalogs of music royalties are continuously creating cash flow and stable cash flow. Attractive non-correlated yields, so very non-correlated to the markets and to the equity markets, the bond markets. It sort of marches to its own drummer. And I would say an additional bullet point that I'd like to add on this, at least verbally today, is that an increasing belief on the part of the investment community and the music industry that the new music royalty space, driven by streaming and subscriptions, etc., is somewhat of an inflation hedge, because if you can picture, during inflationary times, prices go up, therefore price of subscriptions goes up, ad rates go up, and it's expected to be a strong inflation hedge. And of course, the last bullet point here, the growth potential, the underlying growth of the market and the industry is the number one thing that's driving all this interest and excitement. And you know, when Gavin said that I left my position at SOCAN to come and do this, I believe that we're in the beginning of the greatest era of prosperity in the history of recorded music, and I think the growth story will go on for a long time, and we'll get into a little bit more detail of that in a second. This is a chart showing the projected growth of the streaming world, which is the number one driver of the growth of the industry, and this is a Goldman Sachs study that's been widely cited throughout the financial world and the music industry, and it's forecasting that streaming revenue will more than double by 2030. But we like to say that this growth story is not just about music streaming business, although it's primarily driven by that. There's a secondary driver here, which I think is becoming more important as time goes along, and that is an additive layer of the digital monetization of music. And that would be through things like YouTube, Instagram, Facebook, Peloton, and all the other home exercise networks that where you have thousands of people exercising either on a Peloton device or in front of one of those mirror devices that I think Lululemon owns now, or Apple Music, or Apple exercise home exercise app. All of these things create networks of people all over the world exercising to exercise instructor, and they're all listening to music, and it's all licensed and all pays royalties back to the owners of the rights. TikTok, great example. Everybody I think remembers that TikTok viral meme that came around at the end of last year, where they had Fleetwood Mac's Dreams was involved in it, and it was this LA skateboarder skating down the street, drinking cranberry juice and listening to Fleetwood Mac's Dreams, and it created this viral sensation. And that's just one example. Those are happening practically every day. But the really, I think, fascinating, exciting thing about that is that all of these platforms and social media, they're all either licensed today or are about to be licensed. And therefore, every time music's used on their platform, it's earning royalties. And so the very act of generating interest in a viral video actually earns revenue for the rights owners. So it not only drives people to go want to listen to Fleetwood Mac's Dreams, and therefore generates more revenue for Dreams, but the thing that drives them there is generating revenue for that song as well. So that's a really fascinating thing. It's generally all additive revenue, and it's also called user-generated content. There are studies out there that's saying that's currently a $2 billion a year market potential. So that's a real added part of the growth story, which I think is going to be, as I said, very exciting and go on for a long time. So just as a summary about the music royalties as an investment, it's uncorrelated to the markets. There's this attractive, stable annual yield and constant cash flow, long-term growth forecast. And by nature, they're a portfolio. So a catalog is a collection of individual songs. So that's a small portfolio. And we're going to create a portfolio of catalogs. So really, we're creating a portfolio of portfolios. So you have the smoothing effect that you see in any kind of portfolio that evens out the individual variances of all the different elements of the portfolio. And then finally, we have here transparency, and I would also add the word granularity in royalty reporting. And that's a breakthrough development that's associated with the digital use of music and the breakthrough of streaming and all the digital assets associated with that. Because as you can imagine, that process and those companies create a lot of data. And so we have more data now associated with telling us what was used, when it was used, and who used it, and how much it earned than we've ever had in history. So that is an asset when we go to acquire a catalog. We have more data that we can use to analyze its value. And once we acquire it, we have more data that we can use to analyze whether we're receiving the royalty streams that we actually paid for. So that's
Michael, can I jump in just for a second? Sure. So Kyle Mullen, who is the lead analyst in valuing the portfolios that we are looking to acquire, walked us through the analytic process. And it's really quite amazing. A catalog that, say, had 200 songs would have thousands of pages in a spreadsheet of granularity of every time the songs were played, where they were played, who the user was. So we know when we look at a portfolio month by month exactly what every song in that catalog has produced and how predictable it is and how smooth it has been. So it's an infinitely analyzable investment for us to work through, and we can work through these catalogs to identify sort of where the values are and where the opportunities are.
Yeah, great point. And they're actually surprisingly predictable economic revenue curves, and we'll get into a little bit more of that detail later. So with this particular initiative, this is sort of the introduction to the high level of what we're trying to do. We're accomplishing putting in $200 million, raising $200 million, to acquire these catalogs, and we're aiming at acquiring high quality, iconic copyrights that have embedded themselves in culture and generate royalties in stable and long-lasting form. And very interestingly and very unique for us, we're going to be investing primarily in the rights and royalties of Canadian artists. We'll get to that in a minute as to why that is and what that means. But it's really important to understand from the beginning here, we're not talking about the Canadian marketplace. We're talking about the global marketplace, where these globally successful songs by Canadians are earning money from all over the world, very diversified geographic sources of revenue, not just the Canadian market. And this portfolio will have income from established catalogs. Another unique aspect of what we're doing is it'll have a growth kicker from investing in new copyrights. I'll get to the details of that in a minute. And really important for most of us involved in this is that we believe that this will have an positive effect on the Canadian music scene, the infrastructure, the ecosystem, and the economy around the Canadian industry and Canadian culture by helping ensure the sustainability of the success of Canadian music. And we'll get into that in a second as well, as to just how important that is and how big that is. And this is why we're focusing on Canadian artists. If you look at this word cloud, this represents just some of the known, mostly artists from the last 5-6 decades that have created music, and they're Canadian, but their music has gone all around the world and earned revenue from all over the world. And it's really an incredible success story. We don't really pat ourselves in the back enough about it. I mean, everything from, the 60s and 70s, so Neil Young's, Steppenwolf, Born to Be Wild back then, go through the 80s and with Bryan Adams, Loverboy, you get into the 90s and later, and we have some success stories that were unprecedented, like Alanis Morissette had one of the biggest records in the world that the world's ever had. Shania Twain, same thing. And we get into the modern era, where we've got such an impact on the world music scene that that we say there's a Canadian invasion, really, of the world music scene. And interestingly, this group of Canadian creators, we figure has earned approximately or well over $6 billion in music royalties over the last 5-6 decades. And as I said a second ago, we think this could be called a Canadian invasion. Forbes called it a Canadian invasion a couple of years ago. And you know, these three people are some of the most iconic representations of that, but it goes way beyond them. Justin Bieber, The Weeknd, and Drake, of course. And interestingly, that article is from a couple of years ago. This chart here is from late November, and we just chose it as at random. This could be any week practically on the worldwide streaming chart, which is what this is from. And that week, in the end of November, the number 1, 3, and 6 artists in the world were Canadian: Bieber, The Weeknd, and Drake. And of course, like I said, it's representative of almost any week. They'd shift order, or maybe one of them comes off and Shawn Mendes comes on, but it's very consistent. And I think Gavin told me earlier today that, was it this week, number 4 of the top 10 songs in the world are Canadians, 2 by The Weeknd and 2 by Drake. And one of the fascinating things, and one of the things that we're talking about here in this initiative, is that it's not just the performers, it's also the people that their names just came on the screen here, of people who are their co-writers, producers, and beat makers. And this is part of the Canadian invasion, and it's the sort of quiet, silent, invisible part of the Canadian invasion, because you can easily see that Bieber, The Weeknd, and Drake are Canadian, but you don't know that probably 3 or 4 of the other top 10 songs by non-Canadian superstars are powered by Canadian co-writers and beat makers and producers. And so really the Canadian control, or the Canadian representation or presence on the chart, top of the charts, is far more than just the artist, and it's really dominating. In fact, I think you can say the sound of popular music in the world today is largely controlled by Canadians. And it's, as I said, it's really an amazing story. That and so we've done is map this to the metaphor of an iceberg, just to reinforce the fact that the part above the water, the artist names that you're familiar with, is only part of the story, and the bigger part of the story is the people below the waterline, the behind the scenes people that you probably haven't heard of, but we in the music business are very familiar. They're household names to us. People like Frank Dukes, Noah Forty Shabib, Boy Wonder, Murda Beats. These people are on anybody's list of the top 10 record producers and beat makers in the world today. And as I said, they are very much controlling the sound of popular music. And we
Mike, can I jump in with a question? Can I jump in with a
sure.
question that one of our participants sent in? So, you know, sure. We look at all these people on the screen. So one of the questions is, what makes us unique in being able to attract the opportunities to buy some of these catalogs and to know about the catalogs that are for sale? Maybe you could just talk for a second about, you know, the three of you and the role that you have had in SOCAN, and what SOCAN does.
Sure. So if you look at all the names on the screen there, we think our team collectively has the greatest relationship with those people of anybody in the industry in the world. And that comes from the entire length of our careers. In a number of those people we discovered and helped develop and invested in early on in their careers. At SOCAN, for 7 years for myself and 17 years for Rodney Murphy, one of our partners, our role was to invest in them, give them advances against their royalties, help nurture their careers, celebrate their successes. And so we've developed these relationships with them that are second to none. And we found throughout my career, and generally I found this, but at SOCAN, I think we proved over and over again that when it comes to dealing with Canadian music creators, if we're competitive on the business side, the relationship and their willingness and interest in dealing with somebody that they know and trust, and the mission of bringing their rights and their revenue back to Canada, or keeping in Canada and nurturing the Canadian ecosystem through that, is really important to them. And my mandate at SOCAN was to repatriate the stars that SOCAN had lost over a number of years to their American competitors. And we did that in spades. Rodney Murphy and I did that in spades. I think that we probably were 90% successful, at least in in bringing Drake in his camp back. We brought Bryan Adams back, Joni Mitchell. We spotted early on and embraced and kept the next generation of stars like The Weeknd, Shawn Mendes, Jessie Reyez, who's a rising artist herself, but one of the top songwriters in the world now. We invested SOCAN in, advances in her very, very early on, and she's given us the right to talk about this. And she cites that as being a key reason why she was able to catch on and have success. So our experience and our track record is that we have the best relationship with them, and we can leverage that relationship to successfully acquire their rights. And our experience so far in 95% of the conversations we've had with this group of people is that most of them are interested in doing a deal, in selling some or all their catalog, and they've almost all of them have said to us, if we get to work with you, if we get to support this mission, and you're competitive on the business side, where do we sign? So that's been proven. One of the unfortunate things about that group of people and all their success is that most of the intellectual property, most of the copyrights and rights are owned by foreign companies, and therefore most of the revenue bypasses Canada. And one of the goals here is to reverse that to as large degree as we can, and bring that revenue back into your pockets and back into the Canadian economy and ecosystem. And so as we said a second ago, our strategy and our competitive advantage is to leverage our relationship with this group of people to create this incredible catalog and portfolio of songs that'll be comprised of iconic songs known throughout the world, earning revenue throughout the world, and that will have a premium value on exit. We believe that this catalog itself will have a brand, and that it'll be attractive to any other party who's in the business, and probably they won't even recognize or realize that the connecting point to most of the songs and the rights in royalty streams in this catalog, in this portfolio, is the fact that they're Canadian, because most people outside of Canada don't know that most of those people are Canadian, and they don't really care. They just know that the music is incredible.
So Michael, from one more thing, just from one of our clients, which is more on this topic, and his question was, why does the artist want to sell?
Great question. And that's one of the, as I said earlier, one of the sort of converging forces here that was enticing to us to want to be involved in this in the first place and think that the timing of this is perfect. And it's really a change. Throughout history, a lot of the artist community wasn't that interested in it. And there was a bit of a stigma against it. And they were always told, never sell your rights, et cetera, et cetera. And then, they occasionally did, but it wasn't that a popular thing to do. And the reason why that's changed is, number one, the valuations have changed. So sort of like those of us that are in Toronto, we're in a hot housing market. And, if somebody knocks on your door and says that they want to buy your house for a dollar figure that you think is twice, what you thought it was worth, then all of a sudden it gets your interest. And people like to think, well, if it's worth more than I thought, then maybe I should take advantage of the situation right now. Secondly, COVID.
So just on that, just to make a point, when we started investing in energy infrastructure, pipelines had traded for years at 5 or 6 times their earnings because there was so little growth. And when fracking started and the volume of production started to grow, the multiples investors were prepared to pay started to go up, and they went to 6 and 7 and 8 times earnings, and then 9 times earnings. And at that point, the people who knew the industry said, well, these trade historically at 6 times earnings are getting expensive. But the business model had changed. And over the next 5 years, they went to 12 times earnings, 14 times earnings, 18 times earnings, 20 times earnings, and ultimately 25 times earnings. Because again, the structure had changed. And it strikes me that the reason that these artists are prepared to sell is because the valuations are going up. And also because instead of selling a whole bunch of CDs right off the hop and then falling off the shelves in the store, they're generating the revenue a little bit slower, but it's got a long life in the streaming side. And that, I think that's kind of interesting.
Yeah, those are both great points, Dave. And the latter one too is a part of the transition of the of music from the sale of records, that which creates the big bang of revenue, to this long, slow drip of royalties from the consumption of the constant consumption of music. And so this, in effect, replaces to some degree the big bang of revenue they would get from the sale of records by bringing the revenue forward in one check. COVID is another driver. A lot of the touring artists, especially, used to making significant part of their revenue from touring, and that's not happening. And so they're looking for alternative ways to raise cash to keep their empires going. Estate planning. There's been a sea change in the attitude of the artist community towards estate planning. They used to believe that the best thing they could do for their heirs was will them their rights. And now they're starting to realize that's actually the worst thing they could do. Rights are very complex things to manage, and they create dissension in the ranks of their heirs, and also the heirs tend to mess it up, which means that the number one purpose of willing their rights to their heirs, having their legacy continue, actually is undermined because they make such a mess of it. And so they'd rather convert their rights to wealth now and to cash now, and will the cash to their heirs to fight over rather than their rights. And then finally, amongst some of the younger people, it's now gone from being a slight stigma to selling your rights to becoming cool to sell your rights, to becoming aspirational to sell your rights, and convert it to cash in on your current success or your recent success, convert it to cash, use that cash for other means, either investing in their career or their lifestyle, or whatever they'd like to. Ideally, putting their money with Barometer and some of Barometer's funds. Anyway, those are the driving forces, and I've never seen it like this before. I would say that 9 out of 10 people who we approach are absolutely willing to have a conversation, and most of them are actually serious about selling some or all of their rights. Another aspect of this too is that sometimes they want to keep chips on the table, so we're looking at deals where they're selling half their rights, for instance, and keeping the other half for themselves, so they still have chips on the table or skin in the game, as you will. And so they're sort of trying to replicate what you often do in the market when you've got a stock that's done well. This is, if you could picture this is a portfolio of copyrights. If we get even a slice of this, we'll have an incredible catalog, incredible portfolio. Continuing on with talking about the economics of this, this is a revenue curve of a typical hit song. It's based on real data. I won't, for confidentiality reasons, I won't say what song it's based on, but it's a very typical revenue curve of a hit song. This is one source of revenue. This is the performing royalty, which is the dominant source of revenue these days for a song. And that's the revenue that SOCAN manages. But we've simplified it so you can see the curve. So obviously the vertical axis is dollars, horizontal is time, and this happens to be US dollars as well. When a song is first released, there's nothing going on, nobody's consuming it, there's no revenue. But then if it's destined to be a hit, it quickly starts to go viral, climb up the charts, and people listen and start listening exponentially. And so therefore that drives the revenue generated from that. And it has an exponential rise and then a peak and then it starts to fall off the charts, and it falls back into people's sort of recurrent playlists and et cetera. So peak phase of revenue. And then, by the way, this song earned nearly $10 million for all its participants in the peak phase from this one royalty source, revenue source, performing rights. And that we think the peak phase is around 3 years. Then it starts to decline and stabilize, and the stabilizing period is another, say, 3 years or so. And it's right around year 6 from the release of the song, it enters the stable phase, which, as we said earlier, is quite predictable, quite stable in the quality of songs that we'll be acquiring. And it goes on basically onto the horizon. It's more like it acts like an annuity. And these are long-lasting assets. They last for the life of the copyright, and the copyright lasts for the life of the writer or the last remaining writer, if it's multiples, plus in most parts of the world, 70 years. So it's really long enduring asset. And this, as we said earlier, is quite predictable and quite forecastable behavior. And that one song, we figure if you layered in all the other sources of revenue, such as using it in a movie, television show, an advertisement, being on CDs and vinyl, all those other sort of lyrics now, I forgot to mention earlier, that's one of the breakthroughs in the monetization of music in the digital world as well. Lyrics now, when you search for lyrics on the internet or when you watch them displayed on your Spotify, those are licensed and earning revenue as well. Altogether, this one song we forecast would earn $30 million US easily over its lifetime. And again, that's quite typical of a big hit song. And this is how I can visualize the portfolio effect now of dozens and hundreds and thousands of these curves being layered on top of each other. And once again, once they get stabilized and mature, the revenue goes on for pretty stable and predictable for a long period of time on the horizon. But in the growing economy, in the growing marketplace of streaming, and then these curves should actually be going up. As said earlier, if you use an oil analogy, it's like the price of oil going up after you bought the output of a bunch of oil wells. And just like in an oil well, early on in the phase, you could call the peak phase the gusher phase, and then just as an oil as well, it ends up settling down into a stable, predictable output. And,
except an oil well winds up, the production goes to zero, which is very different than this.
Correct. And then this doesn't pollute the atmosphere. This is a pictorial representation of our asset allocation strategy. At least 80% will be in mature and maturing catalogs, and where they're instant revenue. So once we acquire the rights, we take over the revenue streams immediately, and the revenue streams will be paid to us by those intermediaries that we referred to earlier, like performing rights organizations like SOCAN, and music publishers or record labels, wherever we bought the rights from the artist, and they pay on a quarterly or semi-annual basis. So we're timing our acquisitions to be as close to those payment periods as possible. We take over those revenue streams, and it generates cash immediately for the fund, and we'll be paying the preferred rates out on a quarterly basis from that cash. Up to 20% into new copyrights that during the life of the fund, some of those new copyrights will be hits. They'll go through the gusher phase. The fund will capture the peak gusher phase from those copyrights. And we'll get into the nuances of that in a second. But that's where the growth kicker comes from. So it's kind of like we're sitting on, as we said earlier, the music coming from Canada is dominating the world. It's as if we're sitting on the richest oil field in the world. And we're going to buy the stable output of mature wells, but we're also going to drill a few wells in that field because it's such a lucrative field. And this is just a written version of what I just said. And this is just a bit of a visualization of the growth kicker. So if the stable mature catalogs portion was returning 8%, which, and by the way, these numbers are all realistic, but they're also, we believe, conservative, but again, realistic. If it was returning 8% and the new copyright part, we return 20%, you blend the two together and you get an uptick of 30% on the fund. So that's where the growth kicker comes in. And we look at the new copyright part as almost like a VC, mini VC or growth part of the fund, where each new artist is sort of a startup artist. It happens to be also the combined skill set and track record of our team. This is one of our areas of expertise. We have a lot of confidence in our abilities there and our track records there, and our ability to generate great returns from that area and during the life of the fund. So this comes back to, again, what's unique about us and why we think that this is the best way to get into the royalty space. We are uniquely positioned. We've identified a class of people whose rights are, I can't think of a better way to describe it than they have juicy rights. They have iconic, world-class assets, and we've identified this group of people with them, and we have a proprietary and advantaged relationship with that group, and an understanding of how they think and what makes them tick, and how to appeal to them and how to acquire from them. We have a proven track record of adding value to royalties, being able to assess what to acquire either as a mature catalog or as a brand new artist or an established writer that hasn't written songs that we're about to acquire. And we have this unique harvest and replant strategy, or the drill a few wells strategy, if you will, which will enhance the returns on the whole catalog, the whole portfolio, and the whole investment.
Gavin, are you there? Can you just answer this for me? Because earlier today we had a call and you talked a little bit about the work that you did in developing acts, so the both of you did. And Gavin, I thought you said that you'd been involved in developing over 50 #1 hits. Is that right?
I've been involved in producing and writing over 50 #1 hits. 25 of them would be from artists that I developed from scratch. Other ones would have been artists that I wrote with afterwards. Yes.
And so you guys developed 3 Days Grace. Can you just give a little color on that?
So 3 Days Grace were a band from Peterborough, who I was introduced through my lawyer at the time, and I brought them to Michael because I was published by Michael. And Michael had a studio and at EMI Publishing, and he allowed us to record demos, and he mentored us in some of the finer aspects of songwriting. And then Michael took the demos we made to New York City and came back and said, well, I think there's a lot of people interested in this. And then we went on to have a career, a still active career, where the band has the record number of #1 songs at rock radio in America. We have 16 #1 songs in a row. I co-wrote and produced a pile of them. The most important part is I get paid on all of them. So Michael had made at EMI a modest investment in me and a modest investment in them, which has returned to EMI, I would say 50x over the course of the last 15 years, at least. It's 50 to 100x, and I'm not exaggerating. The amount of revenue that continues to grow from these copyrights that are owned by the portion that's owned by EMI, it's a fabulous investment.
Right.
So we're going to try and target similar situations. The other thing, Michael, in most VC situations or most speculative situations, you do not hit it out of the park 100% of the time, and that's built into the economics of it all. But Michael and myself, I have an unbelievably great track record of, monitoring the investments in terms of development and not putting good money in after bad. If things aren't working out, we're not going to continue investing in these startups. But the ones that are starting to smolder, we will find, put some gasoline on them and grow them into the forest fires of money. It's a really unique and fun situation for us because there's nothing more fun than having a #1 song. And investing in with us, you will go for that. You'll have that celebration with us many times over.
Right.
And
maybe Michael. Sorry, go ahead.
Go ahead, Doug. Well, go ahead, Doug.
I was just going to say maybe I could just give a quick summary of the offering as the investment manager. So Barometer, as the investment manager, has built this fund, and we're offering it to our clients and to others. We will have a combination of private investors, family offices, and likely some large institutional investors. We're targeting $200 million in the fund. And with that $200 million, we will purchase a number of catalogs. We have non-disclosures and effectively deals done on a number of them that we can close right off the bat. Our first closing on the fund will be at the beginning of April 1st. And then we will have a number of closings after that and be in real time. The life of the fund will be 7 years, although it's not to say that it has to be 7 years. The first fund that we did, we planned to be 5 years. We actually got a purchase offer in 2.5 years at a substantial premium, which we considered to be a very good offer. But it'll be a 7-year fund with an option to extend. And the reason for that is we want time to develop the newer copyrights that we invest in. The fund is committing to pay out a quarterly distribution equal to 6%, and then an extra dividend at the end of the year, which would top up whatever additional cash flow we generated from the catalogs that we purchase. The management fee is 2%, and the managers have an opportunity to get a performance fee if they exceed the targeted returns. And the target total return we're looking for conservatively is 9 to 12% per year, net to the investors. And the fund can use some leverage if we see the opportunity to do so, if it makes sense. But that's not something that's set in stone. So we're very excited at Barometer because we think that this is an asset that will be really complementary to the other things that we do. It will act completely differently than the market-based portfolios that we run. But we do think it's perfectly situated to be the type of return that investors will want going forward. If we think that long-term rates could slowly go higher and we could see a pickup in inflation, which we believe we will, then we want to own things that can benefit from that. And these are certainly an interesting asset. And so that's the structure. And certainly we can answer some questions. But Michael, do you have some things that you'd just like to add to wrap up?
I just want to add one little thing to what Gavin described there in the terms of the developing of the new things and adding value is that we're also going to be. You might be saying, what do you two guys know about today's music? And as you said earlier, I think one of our skills is finding the finders. And we're so well connected with all these groups of people that are being successful around the world that we're planning to do some joint ventures with some of them, and they have the fingers on the pulse, and they're on the street, and they'll be helping us source and develop the right things and creating the in-house opportunities for the new people that will be signing, which then creates the commercial opportunity, which then creates the revenue from their hits. That's so I just wanted to clarify that.
Right. One of the questions was, will the fund be in US or Canadian dollars? And the fund will be in US dollars. And so that is something to consider. And then the next question that we had from another attendee was his point was, he said, are you a new sector or asset in a category in funds? Where would we say this is relative to other competitive funds? So are there, Michael, maybe you can talk a little bit about what's changing in the competitive landscape as far as investors in this category, relatively new from financial investors like us, but how do we compete against that?
What's our competitive landscape like, do you mean?
Yeah, and why do we think we have an edge over the few other funds that are investing in music copyrights?
Mm-hmm. A great question. So there are a number of fairly new entrants into the space because for all the reasons that are attracting us, other people are attracted, of course. And there's companies like Hypnosis, Roundhill, and Primary Wave be the primary new players that aren't part of the old guard establishment of the media conglomerates that you know, like Sony and Warner and Universal. All of those are competitors to ours. The old conglomerates aren't really being very competitive in the space right now. I'm not quite sure why, other than I guess it doesn't meet their profile of an investment. And as far as the other ones go, we're set up to be competitive on the business side. And that's one of the reasons why we set our preferred return where it is. We know what prices are being paid for these assets out there, and we set up to compete. And our advantage, as we said earlier, is that we've identified a class of world-class assets that we have an advantageous relationship with. And we are very confident that to get them, we don't have to outbid our competitors. We just have to be competitive with them, and then the other aspects, the relationship and the mission of our company will really matter and make the difference, and we'll get those deals. And we also have the unique aspect of the sort of harvest and replant strategy that we have, and that's unique too. So we think we're competitive with them. We know those people. We know what the capabilities are, and I think they know us. They know our capabilities, and there's room for everybody because, as we said earlier, there's tremendous number of assets available out there right now.
There was one more question, and this was from another client who said, "I thought artists were complaining that they got next to nothing for from streaming services." Maybe you could address that question.
That's a fantastic question because we believe that narrative, that's an unfair narrative, it's really two things. One, you have to be popular to make a lot of money. Your music has to be popular to make a lot of money. Most of the people complaining aren't that popular, and so they're the biggest sort of victims, if you will, of this massive transformation of the big bang of revenue from the sale of a CD to the long, slow drip of a streaming subscription. And so they really miss that big bang of revenue that's no longer there from the sale of the thing that crystallized the lifetime value of that music to the consumer in one transaction. And secondly, the artists are receiving revenue from companies intermediaries that they have done deals with and signed with decades ago. And particularly on the recording artist side, their royalty rates result in them getting a very small piece of the pie. So it's not that their music's not generating a lot of money, it's a lot of the money is not ending up in their pockets. And I'm not here to say that's unfair or fair, but that's one of the reasons why they say, I'm not seeing, my music's popular, why am I not seeing a lot of money? The answer is their intermediary is seeing a lot of the money.
Also, being on both the side where I do own pieces of masters and I also own a publishing, I've never been paid more money in my life. This is actually the most lucrative time like, as Michael said at the beginning, the copyright is in the most valuable place possible. Thankfully, the songs that I've written, some of them are very popular. The ones that aren't making any money. Right. What Michael said about the CD, oftentimes the purchase of a CD was like a souvenir. You'd go to a concert and you'd buy a T-shirt or a CD, and you'd never listen to the CD. And so these artists who are less popular seemed to be more popular because they'd sell souvenirs. Now it's a per use basis, and the things that are actually being listened to are the things that are getting paid for.
So when we think about, sorry, I was going to say, when we think about why this is interesting, is that we can get a very predictable cash flow right off the top. Second, as the number of subscribers grow in streaming, the revenues pick up. And then if you think about Netflix, every few months, Netflix adds $1 to their subscription, and that adds to the pool of money that can be paid out to the copyright holders. So that's something that we think is going to continue to take place, because the amount of money that people are paying to get all the music they can consume, is a few dollars a month, and certainly that can go up over time. So that makes it very attractive. And then, of course, the last thing is that, different than in the past, today, as opposed to the artists feeling like they were being stolen from by the publishers because they had no idea how many records they were printing. Today, the people who are collecting the data and the subscriptions are Apple and Amazon and Google and Spotify, who provide incredibly granular data to allow us to make the investment decision.
And in fact, the streaming services pay the majority of their revenue to the rights owners, and every smartphone in the world is a potential subscription to a music service, and so the growth in the subscriptions all over the world is huge potential. Eventually, there'll be over 1 billion people with subscriptions of some sort to music, and on top of all that, as I said earlier, the constant use of social media involving music also generates revenue. So every Facebook page, every Facebook account, every Snapchat account, every Peloton device, everybody at home using their Apple exercise app, those are all revenue sources or potential revenue sources as well.
Right. So the last question that I got here from a client is what happens after the 7 years. So from our standpoint, we get an investment that pays us quarterly, a very good income. Second, we think that the income can grow over time. Third, as we aggregate these catalogs together from lots of small catalogs, a few $1 million each, to a very large iconic catalog, the value of the portfolio grows to a large buyer. And we think that ultimately, as the multiples expand, as the portfolio gets larger, ultimately over the space of that 7 years, the opportunity to sell the fund out to a strategic buyer winds up being very, very attractive.
Correct. And there's always the possibility that the limited partners enjoy the investment so much they vote not to wind it up.
That's right. And that of course could happen too. It could also, wind up as a public vehicle.
Right.
Now, I don't see any additional questions. Guys, is there anything that you'd like to say in wrapping up?
Just want to thank you everyone for their time, and we love being partners with you, David, Barometer, and your team. It's been quite fun so far, and will continue to be. And to hammer home that this is an amazing opportunity. The confluence of events in history are right at our fingertips, and we're excited to capitalize on this timing.
I have to say, I love the idea of hearing a song on a radio and thinking, we own this song. There are going to be a lot of iconic songs in these catalogs that we purchase, and it will be great intellectual property to own.
Yes, and
thanks everybody.
Thanks very much, everybody, for all your time.
Thanks everybody for tuning in, and certainly we have a recording of this if you wanted to watch it again. And if you've got additional questions, please don't hesitate to forward them to us. We're happy to talk to you one-on-one. We're very excited about the opportunity that we have here, and we look forward to getting the first closing done. So thanks so much for tuning in.